Hello friends, this is Raman Gill with your weekly overview of the Forex markets for the week of February the 21st. Just a quick disclaimer before we get started. I am not an investment advisor. This is for educational purposes only. If you have any questions about your individual investment needs, I recommend talking to an investment advisor. So for today's overview, we will start off by taking a look at the economic data that's coming out this week. Then we will get into the commitment of traders data and finally into the technical analysis. For the economic data, to start the week off with, we have manufacturing and services PMI numbers out of the Eurozone. The European central bank has been talking about doing more quantitative easing. So if we continue to see negative data come out of the Eurozone, those fears or the chances of them doing easing further will grow, which will have a negative impact on the euro. So keep that in mind. We also have the German IFO business climate coming out. It's supposed to decline slightly, so we'll keep an eye on that. Swiss National Bank Chairman Jordan speaking as well, which will, if you're trading the Swiss franc, will have an impact on that. So keep that in mind. We have consumer confidence data coming out. So last week we had positive numbers come out for the US. Since the beginning of the year, we have been seeing a lot of speculation in terms of the Federal Reserve raising interest rates or further raising interest rates like we were expecting to see last year in 2015. And now the chances of them doing the interest rate hikes because of what's going on in the global markets have decreased. And at one point with everyone, with the Bank of Japan, Switzerland going into negative interest rates, there was speculation that the Federal Reserve may actually cut rates. So, however, with the positive data that we have seen, the inflation number, the core inflation numbers came out better than they were expected. So with that coming out with positive data, now those fears of rate cuts are decreasing, which means we may see the US dollar stabilize a bit more here. And this week we have FOMC members speaking, so the markets will be looking to comments from the FOMC members to see what we can expect in March. At this point, we do not expect any interest rate hike in March. However, the comments from the FOMC members will have an impact on the market, so we have to keep an eye out on that. We have crude oil inventories coming out on Wednesday, which will have an impact on dollar CAD if you're trading that. And then we have, for Australian dollar, we have private capital expenditure data. Moving into Thursday, we have a second estimate GDP for the British pound and a final CPI number for the Eurozone, which is your inflation numbers. And then we also have core durable goods orders and unemployment claims that we see come out for the US dollar every Thursday. And then going into Friday, we have G20 meetings all day. So any comments that come out of any of the leaders in the meetings could have an impact on the market. We also had the preliminary GDP numbers come out for the US, which will have an impact on the US dollar. So we have the trade balance and we have the core PCE price index information, which is very important for the US dollar, which the Fed will be paying attention to. So it's important to keep an eye out on this number. And of course, we have the consumer sentiment number, revised consumer sentiment number for the US. So overall, we don't have a ton of data coming out, but some of the data here, for example, for the Eurozone and the US dollar will be important. So we will keep an eye out for that. Let's move on to the commitment of traders data report here. As we see, this is first we'll take a look at the euro US dollar here. We see that the dealer positions actually they have changed from long to shorts. Dealer positions are usually hedging positions, and if we look at the leverage money positions, which is our green line here on the chart, the short positions are declining. The leverage fund short positions are declining, whereas the dealer long positions are declining as well. Basically what this means is that we are looking at some strength in euro US dollar. We'll move on to the pound COT here. All right, so here we see the leverage money positions are, which is the green line. Again, here we see the short positions are declining, which again would suggest some strength in the British pound. So we may be looking at a pound going up according to the COT here. Dealer positions have stayed relatively strong. However, leveraged money positions, which are your large funds and CTAs and CFAs, basically who are trading for speculative purposes in the market, their short positions are declining, which would mean that the British pound could go up against the US dollar. Let's take a look at the Canadian COT here. Okay, so for the CAD here, we see in the bottom here, the green line, we see the short positions declining, which again would be bullish for the Canadian dollar. And in this case, the chart that we have here up here is dollar CAD, which would be opposite in terms of the Canadian dollar, just for the Canadian dollar COT data that we see. So according to this here chart, we see that the Canadian dollar should go up based on the COT against the US dollar, which means short on dollar CAD. Let's move on to the Australian dollar here. All right, so for Australian dollar, we see that the asset manager positions, which is the red line here on the graph, they have actually turned from short position to long position. So these are your big pension funds and such that are they generally follow the trend they're in it for the long haul. And they seem to think that the Australian dollar will go up, so they have changed their positions to long. And as we can see here, the leverage money has been decreasing the short position, so we may see some strength in Australian dollar based on the COT here. Okay, moving on to the New Zealand dollar here, we see the leveraged money. We actually see divergence in terms of the asset managers and leveraged money here. We are seeing leveraged money shorts are declining, which would again suggest strength in the New Zealand dollar. So here the green line is what we're looking at. Dealer positions are fairly the same. They have increased slightly, but the leveraged money positions the shorts have been decreasing, which again would suggest long in New Zealand US dollar. So that was the COT view. Now let's move on to the charts. Okay, we'll start off with Euro US dollar weekly chart. So taking a look at the weekly chart here, we saw the euro finally break out of the range here, and now this is interesting because we see a bearish close for the week. The close here has engulfed the candle, so this would suggest from a weekly perspective, it would suggest a short outlook on Euro US dollar. However, we have come into this resistance here, support here, a 106.60, 1066, and this is the area that we need for the short to actually be valid. We need to see this area break. We need to see a breakthrough here, then a retest of it potentially and for the price to hold below this level for a short to really continue. So this is what I'll be watching for. See how the price moves into this area. If it comes down here, see how it holds. So if this shelf holds, we can expect to see the euro go up. But if we see a break through this and a retest of it, then we may see a further bearishness in the euro. So again, this is your daily chart here. This is a line that I was looking at, this 1066 approximately, this area. See how we see twice the price rejected from this level, and then we had an engulfing on a daily chart. We had an engulfing candle and a tweezer bottoms here. which would actually suggest a move to the upside. So this will be critical for euro US dollar here. We may see the price come and retest this level, go back down here, and if the level holds and we see bullishness, then we may see the price come back up again. However, if the price breaks through this level, I'll be looking for the price to break through here, come back and retest, and see if it holds here, then we're looking at a short position. So this area of support and resistance will be critical for the US dollar, and the reaction will dictate where the price goes. However, from the daily perspective, this is an engulfing candle to the upside, suggests an upward move in euro. However, on the weekly perspective, we see an engulfing candle. However, the price has reached the support area. So see how price reacts at this level, and based on that we can take a trade. Okay, moving on to the pound here. Pound was interesting actually. This is the weekly chart, and in the weekly chart we saw price came and tested this 42.45-ish level down here, and then on Friday price closed quite bullish. And one of the reasons for the bullishness in price was because we had there were talks going on between Britain and European Union. European Union members are very interested in having Britain stay with the European Union. However, the Conservative Party had made a promise that once they come into the government, they would put this to vote to see if the citizens want to stay within the European Union or not. And one of the major things that they were negotiating upon were the benefits to migrants from Europe. Britain had seen a lot of migrants coming from different European countries, Poland, Greece, and so forth, Spain, and going into Britain and looking for jobs and opportunities. And Britain now has to take over the unemployment, the weight for like the unemployment claims and so forth. So any of the basically the services that Britain has to provide falls on Britain now because they're part of the European Union. So that was one of the sticking points. And on Friday we saw a news feed saying that they had actually come to an agreement where they had put on a break on that. So they had actually agreed to the Britain's terms on that, and we were expecting to actually see a rise in British pound based on that, because then the Prime Minister has something to take back to the citizens to vote on and give a positive view of the European Union agreement. However, on the weekend, on Sunday, we heard that the mayor, London mayor, actually came out and said that he was not going to support that he would be basically suggesting that the citizens of Britain actually vote against this agreement, and he was not very happy with the way things had gone, even with the concessions they had obtained. So that has created now a big inefficient move, a big gap to the downside. So if we take a look at the 4-hour chart here, we closed way up high at 4,400, and then we saw a drop all the way below this resistance level, and the price is staying here. So this has created an interesting political basically there's a political agenda behind the comments and everything that's going on. So it'll be interesting for the British pound, where I was looking for bullishness for the British pound. Now things have changed with these comments, and that's what we have to keep an eye on to see how where the chips fall. So there is definitely an inefficient move based on the weekly candle here. This suggests bullishness. There's a big rejection in the bottom here, and we were looking for the prices to move up. So if the price does move up, we can look for some opportunities to go fill in this inefficient move, and we may see a rejection up here and a potential short opportunity up there. and in the meantime we may see a long one. However, I would trade it with caution, just because there is a political overtone to all of this, and it will have to kind of keep an eye on the news feed to see where all the chips fall and how we will trade the British pound for this week. Based on the daily candle, again, we saw a big bullish candle here, nice rejection at the bottom. Price came into support 3 times last week and wasn't able to break the support. However, now it's really sitting to the downside. So if the inefficiency gets filled up here, this may be an important area to look for 4,400 for a potential short if it does get filled. And then up here as well, where the price took off, this level 43.50 area could be another place for a potential short move. Once this inefficiency gets filled, we may see we could see a potential short setup here, so keep an eye out for that. Okay, moving on to Australian dollar here, Aussie US dollar weekly chart. We have seen the price pushing up, and according to COT, we are looking at bullishness in Aussie US dollar here. However, it is a bit of a compressed move, and generally what we see when there's a compressed move, we can usually see the price push up a bit and then potentially turn over and come down again. There is this big range that Aussie has been trading in for a while, so in terms of the price action, we could see it go all the way up to the top of the spin here. This is the weekly chart that we are looking at, so that's 72.50, or potentially to the top of the range at 73.80 level here. So either of those levels could be potential selling opportunities. Looking at the daily candles here, again, we see a lot of rejection in the bottom. Big closes to the upside here, which would suggest a potential move to the upside again. So we'd be looking at some of these levels here for potential reversal points. And if the price does go all the way to the top of the range here, we're definitely looking at range bound opportunities or trading opportunities. So this level 73.80 could be a potential selling opportunity as well. According to COT, it is supposed to go up though, so we can look for some of those moves. Okay, New Zealand dollar has been sitting in the range for last couple of weeks, 2-3 weeks here. We see again, we'll trade this as a range bound market. If it gets to the top here, 67.50 area, that will be a selling opportunity. Looking at the 65.50 area here in the bottom as a buying opportunity. So it's very neutral at this moment. Again, this is our daily chart. As we can see, whenever price comes to the bottom here, there's a buying opportunity. When it comes to the top here, a selling opportunity. So that's exactly how we will trade this as a range bound market. Okay, and this is our dollar CAD. We have seen the move to the downside with the oil prices going up. The OPEC countries actually reached an agreement that they were going to cut production in oil. We have seen oversupply of oil, and there had been several times that they were trying to reach an agreement and get the OPEC countries to actually cut production, and they hadn't actually reached an agreement. They hadn't agreed to do that. Now last week they finally decided that they were in fact going to come together and cut the production. So if they do cut oil production, which would reduce the supplies, which means oil prices would go up, which in terms would have a positive impact on the Canadian dollar, which means dollar CAD would go down. So in this case, for the weekly here, we do see a bearish candle. However, we also see a rejection at the bottom. So at this point, we may see another move to the downside, especially if the oil goes up. However, at the bottom here, and according to COT, we are looking at a bullish Canadian dollar as well. So dollar CAD going down would make sense. However, again, we will take a look at this. We'll keep an eye on this level on the weekly chart, 36.20 level, where if we see the price holding above that, we may see a reaction here to the upside, and this level 39.20 would become important. If the price goes up there, we may see a rejection of that. So those are two important levels we'll keep in mind. Now again, looking at the daily chart here, we saw a rejection in Friday's close. We saw a rejection of the top side here, which would suggest a further move to the downside. 3620 again would play a role. Once the price breaks through this 3620 level, we would be looking on the opposite side of it for a back test and a potential move lower, in which case this 3420 level would become important. So again, according to COT, we are looking for bullishness in Canadian dollar, and if the oil keeps going up, we will see dollar CAD move to the downside. So that's all I have for today. Have fun trading this week, and I will see you again next week then. Bye for now.